Hey everyone, Kieran King here. A few weeks ago I did a video on the Enterprise Investment Scheme for EIS here in the UK. This scheme is a government initiative that offers efficient tax breaks for certain investments in early stage companies. If you missed it and want to learn more, please click the link in the description. However, today I'm talking about an even more tax efficient scheme in the UK called the Seed Enterprise Investment Scheme, or SEIS. This works very similar to EIS, however it targets even more early stage companies and can offer some fantastic tax benefits. In this video, we're going to look at exactly what it is, how you can make the most of it when making investments. And now I appreciate many of my viewers don't come from the UK, and so this might not apply to you, but if you have a similar scheme in your own country, hopefully if anything, this will give you an idea of tax efficient investing. So what is SEIS? Well, to put it simply, it's a UK government initiative started in 2012 that encourages investors to invest in early stage companies or startups by offering very attractive tax relief to those investors. I'll do another video on what sort of company is available to raise funds using SEIS, but generally speaking, the requirements are it's a young company, yet less than 2 years old. The funds raised are used for specific purposes such as growth and development. It is in the UK, it doesn't have assets of over 200,000 and has less than 25 full-time employees and so on. But however, today we're looking at it from the investor's perspective. So, which also has certain requirements, such as you can't be connected with the company in any way you're investing or by significant financial interest or employment. You also can't have more than 29% equity, and you also need to be a tax-paying individual here in the UK. If an investment qualifies for EIS, as investors, you'll potentially be able to access the following benefits. Firstly, you can claim up to 50% income tax relief on the invested amount. Depending on your tax band, you can claim up to 50% of the investment against your income tax. The maximum amount you can claim relief on in a single tax year is 100,000. You must, however, hold the stock for a minimum of 3 years and not sell in that time. You're also subject to zero capital gains tax, or CGT. If you sell an EIS investment and realise profit, that profit is 100% tax-free. Again, investors need to hold their shares for at least 3 years. Third, capital gains deferral. Say you have another investment somewhere like a property that you sell. Normally you would be charged capital gains tax on that. However, if you put the gains of that return in an EIS eligible company, that tax can be deferred until a later date. You also have loss relief if your investment fails. This means that in the unfortunate event that an investment does fail, you can offset any losses against your capital gains or income tax bill. So let's look at 3 different examples and how these features can be applied in practice. Let's say a company you are interested in investing in has qualified under the SEIS scheme. You're an angel investor who is on the highest income tax band, which is 45%. Scenario A. You invest £10,000 into this startup. Immediately you get 50% income tax relief, which is £5,000 that you can take off your tax bill. This means that your net investment now, or effective investment, is only £5,000. Let's say in this scenario the company does very well and over 3 years doubles in value. This means your £10,000 investment is now worth £20,000 and then you exit your position. You don't need to claim any loss relief as it hasn't lost any value. And you don't need to pay any capital gains tax as it is an SEIS investment. Your net profit then is £10,000 plus the £5,000 relief you received, which is in effect £15,000. Now, if you didn't have EIS on this, your profit would only be £10,000. Let's move on to scenario B. Say you invest £10,000 as before, claim the £5,000 back of income tax, and like the other scenarios, your net investment is then therefore £5,000. However, this time, after 3 years, the company doesn't gain any value or lose any value. It just stays the same. So when you dispose of the assets, you get £10,000 back. You haven't lost anything, so there's no loss relief there, but you haven't made a profit on the investment either, so there is no capital gains tax to pay anyway. However, remember you did claim back that £5,000 of income tax relief, which means your net profit is technically £5,000, even though the investment didn't gain any value. If you didn't have any SEIS on this, your net profit would be zero. Let's look at a final example. Scenario C, you invest £10,000, claim the £5,000 of income tax like before, and your net investment is obviously therefore £5,000 still. However, let's say this time the company fails, goes bankrupt, and your original investment is now worth nothing. You obviously get nothing on the disposal of the asset, so zero. However, you are able to claim loss relief depending on your tax band, which in this example is 45%. This means that you can claim loss relief of £5,000 times 45%, which is £2,250. There is no CGT on this. Now £5,000 minus £2,250 means your net loss is only £2,750 on that £10,000 investment. And if you didn't use SEIS in this case, your loss would be what you invested, the full £10,000. Now I hope you can see now why it's such an incentive to SEIS investors. You are maximizing any gains and minimizing any losses. So let's move on. How do you actually claim SEIS tax relief? Well, when you invest in an SEIS eligible company, they should produce you something called an SEIS 3 certificate with a reference number. This is usually done within a few months of the investment closing. However, it can take longer. You then need to submit to HMRC details of the investment, how much you are claiming, and the reference number. I've put a link below to the official government website with full details on how to do this. There is also another scheme, as I said in the beginning, called the Enterprise Investment Scheme, which is aimed at slightly more mature but still early stage companies and has similar tax relief benefits. The link to that is below. I hope you enjoyed this one. As ever, thank you for supporting my channel, and if you did enjoy it, then please do hit that subscribe button. Take care everyone, I'll see you all soon.